All right, good evening, everyone. This is Ajit Mishra, and welcome back to the weekly video of Week Ahead Religare Technicals. So, in this webinar, we talk about markets, how the markets perform during the week, especially on the benchmark front. Then we talk about all the sectors, both positive or negative, followed by top gainers and losers in the Nifty 50 basket. And then the main point comes how we are anticipating the markets in the coming week. So for both Nifty and Sensex, we talk about our view, the key levels to watch out for. And in the following slide, we will talk about stocks which are looking positive to us for the next week. And then we end up with a quick poll on this session. And then we can ask any question related to the webinar during the Q&A session. So let's get started with a quick disclaimer first that the information shared during the webinar is purely for the educational purpose. It's not a trading or an investment recommendation. So before making any decision based on the information shared, please check with your financial advisors. All right, so third successive week of rebound in the market. Finally, we had decisive move in the index. Last week also the move was positive, but the actual positivity we saw in the index was largely this week, despite the continued underperformance of the banking index. So as you can see in the sectoral front, banking ended in red with a cut of nearly 1%, but the rest of the sectors like IT, auto, metal, pharma, realty, they all contributed on the positive side and somehow helped the index to maintain the positive tone despite the underperformance of the banking and financials. Same reflection that we had in the Nifty 50 gainers and losers also. So you have three names from the auto pack: Eicher, Hero MotoCo, and Tata Motors among the top 5 gainers during the week, alongside with the two names from the IT basket, Tech Mahindra and LTIM. On the losing side, top 4 names from the banking financial basket: Axis, SBI Bank, Bajaj Finance, ICICI Bank, and then we had the Power Grid also in this list. So put together, it was a good week in terms of participation from majority of the sector. Broader indices made their new record highs, and barring banking, we saw rotational buying across the board. So now what we are anticipating in the coming week, we'll start with Nifty first. So Nifty, if you remember that 19,850 was the area of resistance that we were eyeing post breakout above 19,500, 550 zone that we were discussing it earlier. So this was the trend line hurdle that we had around 19,500, 550 area. We decisively breezed that mark and tested the previous swing high around 19,850. Yesterday we've tested that mark, and since then we are seeing a bit of a profit taking at the higher levels. So what Nifty indicates that yes, after this surge, because it's not only this move, if you'll see that from the 18,800 to 19,800 now, 1,000-point kind of a move that we have already seen. So Nifty is likely to consolidate a similar lines what we were seeing it earlier. And above 19,850, 20,100, 20,200, that is the record high zone, is something that we are eyeing. Downside, the bias would change only if we break this support area again, means that 550 to 400, 450 being the first area of support, and then measure around 19,300. So we feel that in a market like this, wherein the banking is not participating, still the index is maintaining a positive tone. One can continue with the positive bias until we break 19,400, 450 decisively. And in the meanwhile, focus on the sectors which are contributing in the positivity, barring the banking and financials. Talking about the next important sector, banking, that why we are saying an avoid. So 44,100 is what we were eyeing in the banking index to reclaim and to witness some recovery. So it did made a try last week. It crossed that mark, but on a negative candle, means it opened the gap up, but by the end of the day it ended lower. And since then, we are seeing gradual drift. So until we decisively reclaim 44,100, we sustain above that zone with a green candle means a positive trading day above 44,100. Then we can anticipate, yes, that underperformance that we are seeing in the sector is over now, and possibility of 44,650, 45,300 level will be there then. Otherwise, this sideways to negative bias may continue. So 43,250, which is this 200 EMA on the daily chart, is going to be the first area of support. And in case if we break, then 42,600, maybe closer to this zone. So banking is something that one should avoid as of now for the trading purpose. Other sectors are anyways doing well. So be it realty, auto, infra, means capital goods and this metal pack, they all are doing well. Auto is making record high, realty index is at the record high. So one should focus on the other sectors barring the banking and financials, at least for a time being. Now coming to the stock specific idea where we see fresh traction. So first name on the list from the IT pack. So those who are regular to this webinar, you must have heard this, that within the IT pack, our preference is HCL Tech. For the obvious reason, because it didn't participate much, during the market decline in the recent months. In fact, the stock was trading closer to its record highs. You can see this line, red line. This is the previous record high line. And this week, finally, we have surpassed the same with recovery in the IT pack. So imagine something in this way that if the overall texture during the market decline, during the sector decline is positive, what if things change it for good for that particular sector? So this is what we are anticipating, that now after this consolidation breakout in HCL Tech, the outperformance will continue, and it might have more legs to this up move instead of what we are anticipating or seeing in TCS and Infosys. So this is one such stock from the IT basket which one can look for accumulation around the current levels. Next on the list from the airline pack, Indigo. So Indigo, we had discussed this counter earlier also, maybe closer to this area, and after that there was a marginal dip, and then again base formation continued around 2,400 mark, and then now we are seeing recovery, gradual recovery. So broadly, if you see that after this consolidation breakout, this marginal retracement toward the neckline area of that pattern offered a fresh buying opportunities to those who missed the chance to enter in the stock in the first place. So again, this consolidation is offering a higher pivot, and as a disclosure, we have recommended to our clients also, so they may have position, and we are eyeing a newer high in days to come. So this is one such stock that one can accumulate in the next week. Lastly on the list, IRCTC. Again, this stock also is something that we are eyeing very closely for strong up move. Why? Because post this reversal, we are seeing this pause or a narrow range consolidation post the breakout. So again, post the breakout, we have discussed this earlier, that a stock usually moves higher first, and then there is a bit of a profit taking consolidation. That is a phase basically we are seeing in IRCTC right now. Overall tone looks positive. The kind of price action volume that we are seeing is positive, and it's a weekly chart, so that clearly shows the kind of upside potential that we have in the stock post this consolidation. So IRCTC, Indigo, HCL Tech, these are the three names that we like, and which one can look at for accumulation in the coming week. So net, when it comes to the indices, Nifty, we have a positive view, and above 19,850, expect a newer high, 20,100, 20,200. Downside, 19,400, 450, strong support, then 19,300. maintain positive approach. Barring banking and financials, one should look for accumulation on dips in the other sectors. Banking tone looks negative. 43,250 is the 200 EMA. Below that, the selling pressure may extend. So avoid banking for a time being now, and within the private banking space, one should look at the names which somebody is like looking for accumulation, not for short-term trading, but during this corrective phase, accumulation is something that can be considered in the top performing name like Axis, ICICI, and this HDFC Bank. So yeah, that is all from the presentation part today, and we'll have a quick poll now. Please share your feedback, and then you can start posting your question during the Q&A. Please quickly fill this feedback, and then you can start posting your questions. And please make sure that we are not sharing anything stock specific. So anything related to any particular sector that you wish to know, it's fine, which you have not covered during the presentation, but not stock specific queries, please. Please quickly fill this feedback so that we can start with the Q&A. All right, so let's get started with Q&A now. Okay, so we have first question from Mr. AR on, okay, so he has multiple queries. First on the specialty chemical, cement and food packaging sector. So these are basically the part of cement, the infra space, and we are seeing selective buying. In fact, we have discussed this earlier also, that within the cement space also, it's not that we are seeing a clear theme or clear direction. Within this space, Ramco, Grasim, Ultratech, Shree Cement, these are some of the names which are holding strong. At the same time, ACC, Ambuja, India Cement, they all are struggling. So within this space, the top performing name which are trading in sync with the market move should be preferred. Overall, the tone looks positive for the sector, in line with what we are seeing in the realty space. Within the food packaging sector, so honestly, I'm not tracking it very closely, those names. So it's very difficult to comment. But overall, what we are seeing in the mid cap and small cap basket, all the sectors, in fact, something which is related to the paint and other related packaging, they are doing well. Means Moltec, Uflex, they all are doing well. So here again, one needs to be selective. The earning season is over now, so one should take a close look at how the earning seasons panned out, especially in this space, and then look for selective buying. Specialty chemicals, yes, now we have started seeing a bit of a traction. So it's too early to say that it's a clear-cut reversal, but yes, some of these names like Aarti, SRF, Naveen Fluorine, we are seeing signs of recovery. But again, it's very difficult to say whether it's a reversal or just a rebound. So one needs to be very strict with the stop losses, especially if you are planning any trade. Okay, next we have Mr. Subramaniam on power sector. Okay, so power sector, again, like after this recent recovery, we may see a breather in some of these names like NTPC, Coal India, and some of these names from the finance space also. But overall, the tone looks positive. So one can continue with the long position, but keep on trading your stop losses is something that we advocate in power related counters. Yes, in OMC, something that I would like to add here is that oil marketing companies, after such a phenomenal surge, now we have started seeing a bit of a profit taking today. So there's a possibility that this profit taking may extend at least for a couple of sessions and maybe more than that. And during that, it might witness some retracement also. So avoid any aggressive long in the OMC space for a time being now. Okay, next we have Ramanpreet Singh on battery manufacturing space. So Exide is something that we have recommended to our clients, and we are very bullish on that stock. If I'm not wrong, 300 plus is something that we have recommended as a target. So with that as a disclaimer, yes, this space looks positive, but not all the counters. Like Amaraja, I'm not sure is trading in tandem with this. So we are left with the Exide only, which one can look at even at the current levels. Okay, so Mr. Vimal Kumar has a question on gold and silver. So though it's not a part of this, webinar purview, but overall, since we track it very closely, we have a positive view on gold and in silver also. So both, the bullion counters, we expect this positive tone to continue. There could be marginal, pause or retracement in between. So if you are planning to invest in gold, it should be in a way where you are supplementing your portfolio. It can't be a when we add gold to our portfolio, it's more from the hedging perspective, not for the return perspective. So when anything hits bad, means anything which is not expected by the market during a bull run, at that time, investment in gold work wonder. It helps you to take that unexpected move, and you can start thinking about your strategy, whether I should liquidate partially my portfolio in equities. That helps you to at least provide you some time to think over. So from that perspective, yes, even at the current levels, you can invest in gold bees. Okay, next we have question on long term in AI stocks related to this. So there's no particular company as such that we have here which is completely into this. All the IT companies somehow or the other they have something related to this. So I would recommend, since we have seen a prolonged underperformance from the IT pack, it's time that one can selectively buy. And in fact, some of these names, they have done exceptionally well in the recent rally. In fact, when the IT pack was under down tremendous pressure, they were trading closer to the record highs or their 52-week highs. So stock like Birlasoft, KPIT Tech, Tata Elxsi, they all are doing exceptionally well. So within the mid cap IT space, these are some of the names. And from the large cap IT space, of course, we have discussed about HCL Tech. Okay, Mr. Sushil, on the energy sector. So energy sector, Mr. Sushil, we have already discussed about OMCs, wherein we are seeing a sign of profit taking after this strong up move. And it's just a normal profit taking that we are anticipating. Short term bias going to be sideways to negative, but overall we have a positive view. And within this space, IOC is something that we feel is the best bet among the OMC names. And for the refiner side, ONGC, Oil India, they all are trading around their record highs. And again, in that space also, we feel that there could be a bit of a profit taking around the record highs, but the tone is positive. So among these two, I feel that Oil India and ONGC on declines are better candidate if the view is short term. Okay, next we have again Mr. Subramaniam on power. We have already discussed FMCG and defense railway. So yes, so we are seeing traction coming again in the defense and railway related stock. In fact, in today's session, it was noticeable surge in the railway related counters. Defense is anyways doing well. So BEL, BHEL, HEL, Astra Micro, all these names are like still maintaining the positive tone. Then we in the railway space, IRFC, RVNL, Texrail. But one thing which I would like to highlight here is that railway stocks in the last run it was almost like three times, four times of their previous area, means previous zone. So after such a phenomenal move, there should be decent amount of time consolidation or price correction. So that we have not seen in all these railway stocks. So maybe it's too early to say that they are again set for the next leg of the up move. So yes, there could be a bit of a up move from the current levels, but a similar kind of traction that we were seeing it earlier, I doubt that we're going to see this same in railway counters again. So defensives are comparatively better bets like BL, BHL, BEML. All these names are better candidates to look at. And from the FMCG space, again, it's a very mixed pack. Means the majors are slightly on the back foot. So Coal India, I mean to say Colgate Palmolive is doing well. Britannia is looking strong. Then we have signs of recovery in HUL also. At the same time, Dabur, ITC, Marico, they are still sitting on the sidelines. So be selective in this space. So we have already answered about the railway stocks. So I hope it answers your query, Anjum. And all right, so next on fertilizer space and stock related to the agri space. So yes, in fact, Mr. Vimal Kumar has this question, and we has already started seeing recovery in the select names. So Chambal Fertilizer from the fertilizer space. Then we had a couple of names from the agri-related pack also, means from sugar and rice-related counters. So they have already started witnessing traction. But within this, all these sectors, look for the stocks which didn't participate much on the downside. Means if you talk about to give you an example of sugar space, then Triveni is one such name where we hardly saw any retracement during the corrective phase. Then we have Balrampur Chini. So all these names which are inherently strong and outperform within the sector. So look for those names now. Though the broader indices are doing well, they are trading at the record highs. But again, the kind of dip that we had during the previous weeks, that might again derail the momentum and might result in a sharp reaction on the downside as well. So prefer the names which are performing consistently well, over the months, and look for dips as a buying opportunity, not at the current levels right away. So Mr. Benjamin Rowe have the same question on railways that we have already answered. And see, within the banking space, we shared names which are already under coverage, like ICICI, Axis are under our coverage. So from the long-term space. So if you're associated with us, you can just get in touch with your branch or your business partner, and they'll help you with the retest report. All right, Mr. J.R. Chaudhary has question on ancillary space, auto ancillary and metal. So auto ancillary, still we are not seeing a similar kind of traction that we are already seeing in the stocks. Maybe in the next leg, the auto ancillary space also start participating. Some of the names, yes, they are doing well. But we feel that there's still more to come in this space. So one can selectively look at the names from the auto ancillary space to accumulate. Metals, again, I would say it's highly volatile. As of now, we are not seeing a clear trend. Stock like Jindal Steel, JSW Steels, they are witnessing excessive volatility. So within this space, Tata Steel, Hindalco, they are less volatile. So despite the outperformance in Jindal Steel and JSW Steel, we feel that stocks which are less volatile should be preferred at least in the short term. Mr. Ramanpreet, we have already answered OMCs and the refiner part. And okay, so next question on AMC stocks. So it's very difficult to comment. Maybe it's due to multiple reasons that why some of these AMC stocks are doing well and the others are not participating. It could be the overall kind of market size, means the penetration that they have and what is the plan. So everything fundamental factors comes into play. So as of now, SDFC AMC is the only counter which comes to my mind when we talk about AMC stocks, which I've seen exceptional move. And yes, Nippon India also, where we have seen a sharp traction. So instead of looking for the why part, if you are planning any trade for short to medium term, focus on what part, basically which stocks are participating in line with the recovery or rebound. So the chances of those stocks being the leader in the next leg are very high. So again, I would say that laggards, please avoid laggards in this market scenario. Stocks which are trading closer to their 52 weeks low, or didn't participate much in comparison to their peer group counters. Please avoid this name and look for the stocks which are anyways doing well, and any retracement, any dip should be considered as a buying opportunity in them. Okay, so for the next 3-4 years, definitely railway stocks are good. So this is the question from Geeta ji on this. So yes, we have a positive view, and but again, it's very easy to say that we are planning for 3 to 4 years, but when the stock retrace 20-30%, everything changes. So my recommendation is, when you are planning for 3 to 4 years, take a fundamental view, means how the companies are performing in the last 3-4 years, 5 years, depending upon their available history, and then plan your investments, not in the short term price moves. Okay. We have already discussed about defense counter, Mr. Chaudhary, so I hope it answers your query. And there's no sector, if somebody is planning any investment based on sectoral trend. So in fact, banking, which is not participating, is a very good sector to look at. Then we have IT, which after this years of underperformance, we feel that this sector has potential. Otherwise, maintain stock specific approach, because other sectors, they are anyways doing well. So within the realty space, we have seen strong traction. We expect this move to continue. So I doubt that there is any particular sector which not might participate, because on the rotational basis, every sector, if the markets are good, tends to participate. The quantum could be different depending upon their earnings and the other factors. But as of now, we feel that IT and banking is one which are available at decent correction. So this is one space which one can look at for investments. So, Mr. Sushil, we have already discussed about infra space in detail, like be it capital goods and related to the metal space. So, focus on the names which we have discussed during the presentation. Okay. All right. So, hotel related stock, again, Mr. Singh have asked this query, and this space is still holding strong, means be it Indian Hotel, Lemon Tree, Chalet, there's marginal pause or consolidation that we are seeing in this name, but overall the texture looks positive. So in case if you're holding these names, you can continue to hold. See, we can't plan our investment. So Mr. Ashok has questioned whether we should invest for the long term or wait for the election outcomes. I feel that if you're maintaining a stock specific approach, then selectively still you can find good bets to invest at the current levels. Like we were discussing about IT being versus back and selectively from the banking space as well. But yes, if you are planning, based on the recent price action, then you might end up holding, good stock at the wrong price. So look for the stocks which are still offering value and invest accordingly. Or you can look for, SIP route also, means you are investing in any particular stock every month, gradually. You're not buying it at one go. So this is one strategy that one can opt for. No stock specific question, please. Okay, next question from Mr. Ashok on pharma space. Pharma space definitely looks positive to us, and in fact, it's trading at the record highs. And after the kind of consolidation that we have seen, it may be similar to what we saw in the realty space, few weeks back. We may see a similar kind of a trend. So yes, one can selectively look at pharma counters, even at the current levels. Okay, Mr. Lal has similar query. Okay, Avik Kangli have asked about PSU banks. So yes, PSU banks are definitely, ditching the trend that we are seeing in the private banking majors. Means they are comparatively better. If you exclude SBI after that recent, corrective phase. But what we have observed is that sooner or later they also join the overall trend. So my suggestion is to avoid aggressive longs in PSU banks, despite their recent outperformance, and be very strict with your stop losses if the view is very short term. All right, so with this, we have answered all the queries. So thank you everyone for joining in, and next week, same time, we'll connect again. Till then, take care. Thank you.